It is done, it is official, it is signed. Yesterday, Donald Trump signed an executive order to start piling up digital assets, aka crypto, aka very most likely Bitcoin, and this is a massive step forward to mass adoption. I mean, it's nice that, for example, El Salvador is buying crypto and having some on the balance sheet, but of course their purchasing power and their economy is nothing compared to the United States. So if the biggest economy is in the world is buying Bitcoin, that is a huge driver of price up. So this is probably even bigger news than the introduction of the Bitcoin ETF. Talking about the ETF, I've also been looking at this for the last couple of days, and it looks also super strong. We had a very strong start of the year. Then we had a couple days where we had some sell-off, and then actually from the 15 on, I mean, it is just buying and buying and buying. I cannot actually ever remember that I ever have seen an amount higher than 1,000 here on this Farsight website, where you can see the inflow and outflow of the Bitcoin ETF. I mean, this just keeps on going and going and going. It is insane how much money is flowing into this Bitcoin ETF. It's almost like they were already anticipating the news of Donald Trump of signing that executive order. And over here, of course, on the 20th, this was the inauguration and Martin Luther King Day, so the markets were closed. But this on the Bitcoin ETF looks incredibly strong. It's a little bit weird knowing that we have such a great news or so much info on the Bitcoin ETF. However, price is not really surging up. And I have to be honest with you, yesterday when the news came out, I was expecting a huge squeeze up and that we would actually even make a new all-time high. But once the news came out, we kind of had a move up, a little bit of a move down, and now we're just kind of consolidating. So yeah, a little bit of a bummer, but yeah, you have to see this news in the light. Not that we would go up in a matter of minutes, but it is more a huge driver over the next couple of months, because of course it will take time before they actually start purchasing Bitcoin and really start creating a stockpile of crypto. That will still take a long time, but on the long term, like I said, this is just major also for mass adoption. So that looks super good. For now, I am looking at 4 possible trades here on Bitcoin, 2 longs and 2 shorts, and they're relatively simple. But however, the psychology behind these trades, that is actually what is the beauty of it. I'm going to show you that right away. So let's first start off with the 2 shorts. I have a short here from approximately 107,000. The idea is that we are breaking this triangle. And of course, let's address the elephant in the room. Everyone and their mother right now is looking at this triangle, looking at this breakout, and most likely is trying to anticipate a breakout, get in, and then go higher or lower. But what if we go higher from here, so we're breaking out, we're taking the liquidity from both of these highs and go to that approximately 107, and then we start dumping down. And what you will have is that people are trying to long once we have that breakout. So those are the breakout traders. They're kind of chasing the price. And then we will also have a lot of people who will put limit orders right here with the idea that you're going to backtest it and then to go higher. But there is no backtest. We are just dumping down because we have taken the liquidity from both these tops. Yes, there's still an all-time high left, but let's say we take liquidity from both these tops, and then price just reverses and dumps down. Then all of these traders here are getting trapped, and then eventually you see a huge fast cascade to the downside. This would be a very big FU to all the late longers and breakout traders here on this idea. So 107,000 would be the first short. The next short would be a SFP from the all-time high. Now the chances of getting this kind of trade is not super big, but of course if we're getting it, it would still be very nice. So you're going up, you take liquidity from both these highs, then of course also from the all-time high, you lose that level 109,900, and then you dump down. And once you lose the level and you close a few candles underneath, that is where you get short. You put your stop loss above the high and you just trade it to the downside. And since you're taking in all liquidity already from these stops, there's not really a reason to go much higher. So this could then also be a pretty big move to the downside over the course of the next couple days. Then of course we also have two long trades, and that is a long from this double low, and I'm going to zoom in. Let's do the 30 minutes so that you can see what I am seeing. And that is, you have these two lows right here, and these two lows, well, they're a little bit clustered and also relatively close to each other, where this low is ever so slightly higher than this low. So that doesn't look all too pretty. So what I would then like to see is that, and I'm going back now to the 1 hour, is that we are going lower. We are taking that liquidity underneath both of these lows, and we have a quick reclaim of the level. That's important. I want to see a quick reclaim of the level, and then you enter the long, put your stop loss underneath the low, and then just trade it to the upside. And then really I will be targeting at least both of these highs, so that could also be a very nice move. The other long idea that I have is that you are dumping down, and you're not only going to take the liquidity off this double low, but also from this low right here and this low right here. So then the long from the bottom would be 99,500. So you're going lower, and then also here could be the exact same trade or the idea as the long, but then of course reverse, is that you have people who are going to short this breakout or are putting their limit orders with the idea of a backtest. And then you're getting that, and then everyone here is short, and then you have this huge squeeze to the upside, and all of those people who shorted there, they need to close their position, and that in itself is then the squeeze. And then you have a very big fast move to the upside of everyone who tried to short the bottom of the range instead of looking for longs. So this could be a very nice long trade. 99,500, squeeze them all out to the upside, and then you wreck most of the traders. Now the absolute FU trade would be something like this, where we first take the liquidity on the top, take out the late or early longers depending on how you look at it, and then we're dumping down, and then to that 99,500, and then going back up again to create a new all-time high. Now you might be thinking, isn't that a lot of steps, a lot of, yeah, but what if this, what if that? I know, but if I'm looking at past and these kind of patterns for BTC, this is a lot of times what has played out. Everyone is waiting for a textbook trade like this, and what you're getting is late longers are getting wrecked, then we're dumping down, everyone is rushing into shorts, boom, now we're killing all the short traders that entered the market here, and then you're just squeezing back up, then you're creating a new to all-time high. So this will be the ultimate FU trade scenario. Of course it will take many days to complete, but that would be very nice. If we're talking about taking the trades anyways, I am actually thinking about taking these trades today, because this pattern usually breaks out at and around 70-75% completion of this pattern, and yeah, that will be then today on Friday the 24th. It will be very weird if it happens on Saturday, but hey, never say never. But I actually think it will be today, because usually it doesn't go all the way to the end and then has this breakout. If it does happen, it will mean it will be a very ferocious fast breakout, but like I said, usually that happens somewhere 70-75% completion of the pattern. That will be today, Friday the 24th, and then we can take one of these trades. Now if I'm just quickly looking at market Cipher B, then I have to say here the 1 hour, it looks like we are printing a red dot. The money flow is not all too pretty, so it actually says here that we need to go down before we are getting a breakout. So that will be maybe somewhere here, and then of course is this decision time, are we going to break lower or break higher? But this 1 hour says we're going down. However, if I'm then looking at the 4 hour, actually it doesn't look all too bad. We have the momentum wave higher, the RSIs are pointing a little bit higher, they're not together, so no strength, but the money flow pretty thick in the green, nothing too much to worry about. If I'm then looking at the 8 hour, kind of the same story. We have the momentum wave higher, RSIs are tied together, money flow is still thick in the green. The daily then, we printed a red dot yesterday, however the money flow is curving to the upside, VWAP looks like it wants to bounce, and also the RSIs look pretty strong. In other words, yeah, a lot of these time frames, they're pretty much conflicting with each other. If I see something like that and all these time frames are all over the place, I am paying less attention and rely less on market Cipher B, but I'm looking more at volume, breakout, support and resistance. So I am aware that some of the time frames are bullish, the bigger ones, and I am aware that some of the time frames are maybe a bit more bearish, the smaller ones. I will keep it in the back of my mind, but I then mainly trade off support and resistance, candle structure and volume. That is in that case more important. And if all the time frames are lining up again and everything is bullish or everything is bearish, then I am more triggering on a long or short based on market Cipher B. So that's just the last key takeaway that I want to give to you. The very last thing that I then want to say is that there are a few trades in this very small range here. I personally wouldn't touch it. You need to know exactly what you're doing, have your risk management in place, know exactly where to enter, where to get out, and treat them as scalps. But the bigger and the best trades are really those 4 that I just gave to you. Now, if you want to know exactly when I'm pulling the trigger on a trade, or if I maybe even scalp this little area right here, then feel free to join me on Discord. It's completely for free. You can find the link in the description, and when you're down there anyway, also feel free to like the video, share it with your friends if you think this is useful. I want to thank you guys very much for watching it all the way to the end, and see you in the next one. Bye bye.